seems like the commercial side has kind of lagged the residential side as far as the little bit of decline or slowdown. That seemed to have started last summer into fall, and it's kind of still remained a bit slow, but I still see people doing deals and talking about them, and marketing just maybe not as many. So just stay patient and underwrite.
Real Estate Hustlers podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we're joined with Andrew Long. Andrew is a seasoned real estate investor and contractor with a track record in luxury home construction and sales. Based in Des Moines, Andrew blends his expertise in build-to-rent projects with his passion for family and community. Andrew, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, I appreciate you having me on the show, and excited to share some information here and go talk about real estate. So obviously a little background about myself. As you said, I'm Andrew Long. I'm based in Des Moines, Iowa. I've been in the real estate industry for the past 10 years. I always tell people it actually started out with selling some farm ground and having some cash and asking some advice on what to do. And someone turned me on to investing in real estate. And, that started with buying 3 single family properties out of the gate. And then shortly after that led to starting a construction company. And then that led to me getting my real estate license. So for the past 10 years, I've been doing all things real estate. But as I've invested in real estate, that's only a piece of, right, all the other stuff I do in real estate. But I've ventured over into the getting out of single family and into the commercial side of investing in like multifamily deals, looking at ground up development and other asset classes as well. So that's been where I've spent quite a bit of my focus over the last year, just learning and growing in that, and bringing some of my existing knowledge and skill sets to the table at the same time, networking with others. And so that's kind of a little bit of the backstory of how I got there. Of course, there's 10 years of time and a lot of things within the industry that have experience on. I won't get into a ton of super detail, but I think the biggest thing is just, for me, it was realizing the opportunities that were available in the commercial real estate investing world, and compared to what I had seen in single family, and then the path of how you get there is quite a bit different. So that was pretty eye-opening for me.
Yeah, and having the trained eye and skill set of the construction background, that puts you in a unique position for real estate, because every project typically is value add, and having that construction side,
Correct.
kind of knowing what lies behind the walls it puts you in a different category. You can
Yeah.
you can leverage that in a lot of different ways. Actually, let's get into that. How has that
Yeah.
experience leveraged your you getting into other deals with partners?
Yeah. Yeah. So it wasn't one out of the gate that I was, I guess, looking at from a leverage, but more of just letting people know I have that background. So then I think that builds some obvious relationships with people who maybe don't have, or maybe are a little uncomfortable in that, especially when they're looking at value add deals. But that has, I would say in the past 4 to 6 months, I've had a lot more conversations with other investors who have mentioned the value of that, and then wanting to reach out and see if I could help assist them on their team. So that's opened up some GP spot opportunities for me on some deals where I can come in and help out with some due diligence, execute the business plan and CapEx, and oversee that and help others learn and grow in that area as well, and to get you into a deal as well. So which is very it's a great opportunity to be able to use your existing skill sets in this new adventure.
Yeah. So when they're walking the property, you'd be out there for the due diligence,
Yeah.
having the guys get the line scoped and checking for deferred maintenance, coming up with the reno budget, and
Yep.
then would you then execute the strategy for procuring the material with the labor, or do you bring that side onto the deal?
Well, just I would be more like what we call a project manager. So I'm really overseeing. So here's the plan that the partners have come up with. We've kind of gone over that due diligence and the budget. Now we're in a spot where we're going to execute that. So that tend to falls underneath a little bit of the asset management role in combination with all the other things that you have to do in asset management. But I think that's where I've seen some other investors I've talked to have mentioned like a little bit of struggles of like, hey, we're trying to go out and execute this business plan and we're hiring contractors to come in and do that work. But there's a level of knowledge and experience that plays into how do you handle those trades and how do you hold them accountable to the work. And, for example, you don't write a $30,000 check with no work being done and then they don't ever show up again, and people are learning some hard mistakes like that because they haven't been in the industry or, and that's kind of those little nuggets like that I can teach and bring to the table and kind of help other people understand how to process that out. So that's probably the project management skill set piece is one that I think is very valuable, but I think it's also one that's fairly overlooked.
It's definitely it's valuable. It's a critical role. You've got to verify that renovations are not only one getting done, but getting done correctly. Because there's nothing wrong. There's nothing worse than going in and a job is completely hacked, and you're still paying the same amount as if it was supposed to be a quality job.
Yeah.
And if it looks that bad on the surface, what does it look like on their plumbing, their electric, and just the other components that could go along with it? But you need a trained eye, and in order to also keep the cost where they should be, fair market value. So you get what's called vendor creep with a lot of
Yep.
guys that are along for the ride, and
Yeah.
they can kind of pick up when you've got somebody unskilled.
Yep.
That are managing, and then they can take advantage of that, and they will.
Yeah. Yeah.
Um,
Unfortunately, that does happen in the construction industry, right? And not everyone's always going to be looking out for your best interest. And so just being aware of that is the starting point, right? And I think that's where the construction background experience comes in because you're able to I've already experienced, I've learned some of those hard lessons myself over the years. So I know what to look for, questions to ask, and ways to vet that out. And, hey, are we dealing with a good contractor that's going to deliver them, what they're going to do. And, so.
yeah. What do you all do with materials? Is that something that you all provide for your contractors, or have them purchase it? What's your all's process when you're doing large renovations?
Yeah, I think it comes down to who's on the team. Sometimes there's property management companies that are involved who have in-house people that are either skilled labor, and sometimes they're helping source those materials and things like that. And there's also, depending on the size of the project, some connections where, like, if you're doing, lots of cabinets and apartments and things like that, where you can get some kind of bulk pricing on some of those things. And so just putting those resources together on the front end is the approach, and kind of using, who's on the team and what skill sets are there. That makes sense.
Yeah, and it's always tough because nobody wants to really upfront the cost, the burden of upfronting
Yeah.
all the material costs, and it's
Yeah.
who can you pass it off to that's going to actually come through and make sure it doesn't mess them up, and it comes down to strategy play, who's doing it. So
Yeah.
um, very cool. So talk to us about some learning lessons that you've had while being in real estate for some beginning real estate investors who are looking to get into it.
Yeah, I think the biggest thing from a learning perspective is, maybe this is a simple one, but, as I got started and I was networking and I was meeting tons of people, I wasn't very good at documenting all of those and like building out what, we would call a CRM or a list of investors, and, where are they investing at? What kind of deals are they looking to get into? And, that's kind of one of my things is that as I've been doing that, I like to be able to connect, people and locations and types of deals based on my previous connections of networking with people. So it's I should have done a better job of documenting that and starting to build out some of those resources. So now I'm having to go back and implement and build those things out. Part of that's probably just the learning curve. You kind of learn as you go, but yeah, if you're starting out, make sure you've got, even if it's a simple Excel spreadsheet, to document all the calls you've had with other investors and people you're networking with, and jotting down the notes of like, where are they located, what types of deals are they looking for, those types of things. And that way, you can kind of go back to your database and say, hey, I'm looking at this deal, who do I have at my disposal that would be interested in partnering on a deal. So
Well, and I think a part of that is not necessarily knowing or thinking about investors when you're going out there and doing it on your own. You're looking for the next project to purchase, renovate, and add to the portfolio. And
yeah.
as you realize you need to possibly bring on some other people to help scale and create a business out of the business. That's where you need partners and equity partners, and then you think, well, now it's time to build a list. But that's kind of a part of our road as well. Early on, just ton of contacts, no formal list, and going retroactive and
Yeah.
formalizing the list and whether people can do and what they're looking for, and whether it's vendors or debt brokers or multifamily brokers, just building the list out and keeping in touch with them. That's it's huge. Emails is still definitely a very, very effective way to communicate, for sure.
Yeah. I think that, like to your point of, looking at, I see a lot of people start in various spots. When they get into investing, they maybe have read some books, they've watched some videos, taken some courses, and there's always seems to be kind of a direction or a path. Like, hey, maybe you start as a wholesaler, maybe you start doing some fix and flips, and you build up capital, and then you get a little bit of a larger property, and then you go into multifamily and commercial side of stuff. But that was probably the thing for me that I didn't go down that path. I started with a few single family, and then I just let that kind of stay for a while. And then as I got introduced to commercial side and multifamily specifically, that's when, my eyes were opened up to that it was more of a team sport, right? So it's not relying just on yourself and your own resources, because you're very limited on what you can do. And it's really about, building the team and bringing people together, and partnering with other people that are like-minded and have same, goals and visions. And, that's a lot of networking to do that, but that's part of, the difference between, those things. And I think sometimes people limit their ability to get into a deal based on maybe what they've learned, that, oh, I can't go do a larger apartment deal because I couldn't get the loan or something. Maybe that's not your role in the team. So, that was the eye-opening thing for me, kind of a learning curve in investing, I guess.
Yeah, that's networking. That is a key element, and I think that you kind of get to that point to where you're like, wow, I need to start getting out there and networking, and that's when you realize that there's a whole nother power level to it.
Yeah.
Talk to us a little bit about how you approach networking and how that's helped you.
Yeah, I think that I've gotten involved in a few real estate investment groups where there's natural networking going on, because there's weekly mastermind meetings and calls, and then you're connecting with people inside of those calls, outside of those calls. And then I've been attending, real estate conferences as well. So those are after I went to my first one, I learned that a lot of times the content that's being presented is great, but we most of the time know what's being presented. It's the being in the room and being around those other investors, and the information between the networking that goes out in the lobby is a huge deal. And so to, make sure you're taking advantage of those opportunities when you're at a conference like that, because you're going to meet people all over the country, and that's going to, it's your network. They always say obviously your network is your net worth, right? So the bigger that network gets, the more opportunities are going to open up for you.
Yeah, especially if you can bring a skill set to the groups to where others have not acquired and really can't acquire a specialized skill set. That's huge.
Yeah.
Um, how do you all identify the deals that you're wanting to purchase? What do you look for?
Yeah, so I've got kind of a unique background, because I do have my real estate license, right? So I have this, natural in with brokers, or that connection, right? So I'm a real estate agent with EXP Commercial, so I have online platforms where I connect with other brokers. So that's how I'm, looking at sourcing some off-market deals and connecting with and networking with those brokers specifically within EXP, but then also making those connections outside of that. So that's about where I start with trying to source deals and find opportunities that would be there. So
So that's a huge end. I'm sure you have access to data and where market trends are heading to. Is that right?
yeah, yeah, there's a ton of tools inside of that. Like, I've got Reonomy and some other tools as well that help, find the data, the research, and all of that. That's at, disposal of your fingertips. Some other investors have those as well, but they're buying those at pretty large subscription prices, and so I get those at, some of them are free and some of them come out discounted rates
Yeah.
because of that background. So that's helpful just from an overhead perspective. But yeah, it's
Yeah.
those tools are certainly useful in helping dive in deeper when you're going through the underwriting and evaluating locations and things like that. So
Yeah, I think Crexy's actually pretty good on price, the pro version, with the amount of data that it provides um, versus CoStar. CoStar's, of course, premium, but it's you pay for it for sure.
yeah.
Um, what So talking about the areas, what kind of areas are you looking for? Is it I mean, everyone wants to be in the A class area. Are you looking at tertiary C class area? And just tell us a little bit about that.
Yeah, well, so I don't know that. So I guess I take a little bit maybe of a different approach, maybe not. I'll just share, but like, so when I first started out, I was coached up to focus on a couple markets, know those markets really well, and then just work within those markets, right? So originally I would pick my backyard, which is Des Moines, and then also I picked Dallas, Texas, which is the second market that I was most familiar with. But as I got into that, I was like, well, that's a very saturated market, and then so a lot of people kind of like to be in that southeast region, and then of course the Midwest has over the last couple of years become pretty hot. So that's why I brought up my background in connecting with brokers and stuff, because it's a little challenging for me to just stay in one or two markets, because I'm constantly networking in these other groups that I'm having access to deals across the country. And so I've kind of made my focus in on, finding deals and then being able to make those connections uh, in different locations. And if I can, if maybe I'm just helping find the deal, but a lot of times I'm trying to find ways to where I could also contribute to that if it's a good deal after we look at it and underwrite it. So I haven't really narrowed down any particular markets, but definitely liking the Midwest. Kansas City has been a market that some of the other investors I work with have been pretty hot on that trail, and then the Des Moines is actually not a bad market either. So the Midwest sometimes is a little bit they say is more steady, right? So there's not as much ups and downs that you would um, see and like you do in some of the other bigger markets where there's really big highs, but there's sometimes can be some lows when things go down. So yeah.
Yeah, Midwest is steady Betty. Get great employment, cost of living, and it's not the exciting Miami's and Floridas,
Yeah.
but you don't have the erratic upswings and downswings neither.
Yeah.
Um,
Yeah.
Very cool. What gaps do you see in teams when they GP a deal together?
Yeah, that's a good one. As I've been working with other GPs and networking and talking to them about just different challenges that they've had and stuff like that. I think one of those is there's the chase and finding the deal and underwriting and getting under contract. Okay, now we've bought it. Now what, right? Like, so there's obviously usually a business plan associated with that, like a capex budget. We're going to do this value add, and we're going to in 3 to 5 years sell whatever that those terms are. But I think when people get into that, they don't maybe realize fully like it is a business, right? You need to structure that team, so that team has to have some structure so that it can function and flow together, so that you can execute on that business plan. It's not solely based on one person. There's an asset manager or two that might leave, and there's some other supporting casts with that as well. So I think that's probably a gap that I see with investors, is just really understanding and treating it like a business and structuring it. Once you have a deal in, you treat that deal like a business. And then the other part of that, what we talked about earlier, is the gap of, being able to execute with the construction side and have that experience in the project managing. So those are kind of two gaps that I'm identifying, and just having more conversations with other investors just to see if they're, seeing those things, the same things, and experiencing, and what, how might you consider people you bring onto your team when you're putting those deals together. So
Yeah, I think that's the biggest crippling point for a syndication group GP is when
yeah,
they rely solely on the property management to execute their business plan
yeah,
and effectively run the property, make sure the NOI is there. Like property management has a whole set of bills on their own, so they've
yeah,
got a operating business. Their first priority is to make sure their bills are covered, not the properties and not your business plan. So it's
yeah,
if you can vertically integrate and manage it, the property's performance just skyrockets. And that's just the way it's an alignment of interest. There are very good property management companies that will actually go in on the deal as well because they believe in the deal and their
Yeah.
alignment's there and they want to make sure that it goes good. Those are the great deals where everyone's vertically aligned, the
Yeah.
same mission, but smaller scattered sites, it's very tough to get that. Larger properties, you can definitely achieve that if it's the right setup for sure.
Yeah, I agree.
Very cool. So, tell us some things about or some wins that you've had, some properties, and you went in and everything's went like it should, and you've added value.
Yeah, we've had some deals that we've actually, maybe talk about some of the ones we haven't, done, just because I think that's important as well, right? So, we've looked at some deals where we've gone in and we have actually looked at the due diligence and the value add, and there's a lot of deferred maintenance on a particular property that we were looking at in the Kansas City market that we ended up trying to renegotiate some of that with the sellers, but they weren't wanting to come down on their price. And so, we ended up walking away from that deal. And so I think it's always good to talk about those as well. So just kind of flipping that on you. But, some of the other deals that I like that I get interested in are some of the ground up development deals, but those take such a long time to cycle through. But they have a construction component that, of course, with my background in construction, I feel like just get intrigued by those. And so, but yeah, those are a couple of the ones that I've looked at. So
nice. Yeah, new construction. You've got the entitlement process that takes forever, and finally able to break ground. That's almost a 2 year, in a lot of cases, 2 years and over to even get to that point.
Yeah, and then you got another 2 to 3 years of usually construction on top of that. So it's quite a journey. But those are kind of fun, bigger, longer term hold projects to be a part of, and if you can find the right teams and developers and investors. So yeah.
100% agree. So somebody wanting to get started into real estate, how would you recommend that they get started?
As far as investing goes,
investing, whether it's a limited partnership or if they're wanting to go out and get into real estate, whether it's single family, multifamily, how would you recommend that they take their journey?
Well, I think there's obviously a lot of entry points to maybe start with, like kind of understanding the big picture and like where they could start. Because again, like I mentioned earlier, some people get kind of pushed in a direction that may not be the right fit, but they go down that road because, maybe they're like, hey, well, I don't have any money, so I'm going to flip homes and I'm going to make money. Then I'll put money in deals. And that might be the right path for some people to start. So I think you kind of got to evaluate your own setup and scenario and where you want to go, like what your goals would be. And then based on that, like what entry point, what might help you get there the fastest, right? So sometimes for some people, it isn't just, doing fix and flips. It might be, hey, let me learn how to find deals and underwrite these larger deals and then network and partner with people. That might take a year or two before you get, things going. And some people their entry points are faster. Like I've seen people get into deals within 6 months or sooner. But there's a lot of details that go into these deals and stuff. And so some people like to go fast and some people like to analyze and whatnot. But I think it's just really trying to, evaluate where you're at and then find a spot where you feel like it's a good entry point to help you reach your goal the fastest. So it may not always be in one particular location. That would be my advice.
Yeah. Get some.
Typically, if I'm at investor meetups and networks, I'll talk to people, and they're a lot of times talking about, what they're doing, and a lot of times it is fix and flip, it's wholesaling, and they do want to get into some larger multifamily deals. And I try to explain to them like, hey, there's a path to do that right now if you want to pursue that path. And I just share my experience and how someone else just shared with me the opportunity, and then it's really a team sport. And so you don't necessarily have to bring the money to the table to be in the deal. You might be able to bring the sweat equity. You might be able to source deals, help underwrite some of those things. So that's kind of then, again, evaluate your own skill set, where you fit in, and then, focus in on those and build your strengths and continue to, and learn to grow outside of that too. So I've been challenged, and, I'm probably not a natural capital raiser, but I've been challenged by some other investors to like start building that platform and taking opportunities and talking with your sphere and stuff like that. So
Yeah, I think capital is attracted to trust, and trust knowing that you know what you're doing. So if the trust is there that you're going to do right by the project, by the investor, and you know exactly what you're doing, you know the next 5 moves. That's where raising the capital will come. 'Cause it doesn't come by being a good deal. It comes by the person
yeah,
who's running the property, running the
yeah,
project.
yeah,
Uh,
very emotional.
100%. Because I mean, anybody can take, not anybody, the wrong person can take a good deal and screw it all up and make it into
Yeah,
a very, very bad deal. And that just comes from inexperience and lack of knowledge and lack of team and effort. But with these properties, if you bring in the right elements, the right people, the people that are knowledgeable, and they're all in their own swim lane, the project is a success just by the team itself. But
yeah,
it works, and you create a mini mastermind
yeah,
by buying the right property. I mean, it's a
yeah.
mastermind of people. So it's
Oh yeah, for sure. And I do think, I mean, that's part of the process, right? You know, when you're networking with other investors, you're building those relationships, you're building that trust. Then when you're also working your own sphere, because you might have, you know, friends and family or people that you've known over the years that aren't into like investing from an active perspective like we might be, but they might want to be on that LP side, right? And so going back to that entry point, some people they start with just investing, you know, as an LP, and then they start seeing and learning, and they get connected with some of these teams, and all of a sudden they're like, you know, I think I might want to go and try, you know, that active side to be a GP on a deal, and so
yeah,
I've seen people start that way too. But yeah, you're right. You know, but I think it's important to evaluate, you know, people that you want to work with, build that trust, vice versa. And, you know, not every team that gets put together is always the best team. And so that, to me, that's can be challenging in the real estate industry. And I think that's where a little more due diligence when you're working together and versus kind of getting, you know, obviously rose-colored glasses of like, hey, this is a deal, this will be great. I mean, we all want to be in deals, right? We want to
yeah,
grow our portfolio and reach our goals, but to do so with, you know, making sure you're being diligent on that. And I guess part of it for me, I'm a kind of a high analytic and detail fact finder, but it's, you know, one of those things that I think that it's sometimes being a little bit slower is okay at times, but then, you know, you don't want to hamstring yourself. And so you got to kind of balance that out
yeah.
and take up things.
Uh,
And nothing's going to be perfect, right? So you're always going to learn through the process.
yeah, that's it. Yeah, and yeah, buy right. What's your crystal ball saying about 2024 and 2025?
Yeah, crystal ball, right? It's I guess what it seems like, or I'm hearing from different sources, is that I think you'll see, you know, interest rates. I'm going to start on the residential side. Will probably tick down a little bit, and buyers will jump back in the market and, you know, be purchasing homes. I think when it comes to the commercial side, you know, we're still kind of in this lull of where interest rates have doubled over the last year and a half, and I'm seeing a lot of deals are having a hard time coming together. Sellers are still trying to achieve a certain price, and buyers are underwriting at current conditions, and that creates the gap, right? So we're having to find creative ways to, you know, through creative financing to try to bridge those gaps and bring those deals together. But I think we're still going to see some downturn in the commercial economy through probably the spring and summer, and then there'll be some opportunities out there, and to continue to look for those opportunities, because things are down, that's usually when you can find some of the best deals. And I think it'll start ticking back up towards the end of 24 into 25 is what I'm seeing. But, you know, who knows? It could change overnight. So,
Yeah, and if house prices don't cool off, I don't know what it looks like if the economy comes roaring back. It's
yeah.
yeah, what does that look like? But we'll find
Yeah.
out.
Seems like the commercial side has kind of lagged the residential side as far as the little bit of decline or slowdown. You know, that seemed to have started last summer into fall, and it's kind of still remained a bit slow, but I still see people doing deals and talking about them and marketing, just maybe not as many. So just, you know, stay patient and underwrite well, and continue to network, and, you know, you'll find some deals. So
Yeah,
yeah,
yeah. I think it's all about the basis. If you can buy it right, I mean, it's instant equity when you buy based on replacement purchase on the square footage or the unit or the NOI. I mean, if you can buy it right, it'll be a good deal.
Absolutely.
Andrew, if somebody wants to get a hold of you, learn more about yourself, possibly invest alongside of you, how can they get a hold of
Yeah.
you?
Yeah, well, you can find me on a lot of the social media channels. So I'm on LinkedIn. You can look up Andrew Long, probably associated with West Des Moines, Iowa. I've got Facebook, just Andrew Long. And then I've got Instagram. My handle's Catalyst Connector. So you can find me there. And my email as well is andrew@andrewlongsells.com. So you can email me there or look me up on socials. Love to connect with anybody, talk real estate, and see how we can help each other. So
Awesome. Andrew, definitely appreciate it. Look forward to following you, and we will talk soon.
yeah, I appreciate it. Thanks for the opportunity, Josh.
All right. Thank you. Bye.
Yeah, take care.